Hey guys, welcome back to another week here at Financial Hub. So this week, it's me who will be doing the market analysis for you, and just to catch you up on a lot of things that I've been doing. I know I've been missing for a long time. If you know, I had a lot of personal stuff that were going on, so I had to sort that out. But right now I'm back. Things are back to normal, and now we're really just catching up on a lot. The past 2 months were quite hectic for me, and I couldn't really focus on a lot. And I don't come and give you half-baked stuff. I normally want to come and give you full data, full information. First things first, being about prop firms. So today's video is not about prop firms. I'll talk about prop firms in a different video. We keep updating you a little bit on our podcast, so you can check out the podcast and see what we talked about. Like the previous one, we talked about of how the first quarter, how we performed, how it was. So we talked much about prop firms and what's happening in the prop firm space, but we'll also talk about it much more. So today I won't focus on that because that one also is totally different. First things first, people like TFT. I had an account with TFT, and we had a student alumni greet and meet last Friday, and a lot of students were asking me what happened to that account. I had quite some accounts there. I had about $400,000. I had $100,000 and a $300,000 account, which sort of we're still waiting to see what's happening. So the reason I didn't rush to do a lot of things is because I didn't want to react. I wanted to actually understand what's happening in the prop firm space. They told us to give them 30 days. I'm a patient person. I gave them that time. So other than that, I'm not here to really talk much. I'll do a better analysis on prop firm general. Some students were also asking me we should be doing a breakdown and sort of an overview of different prop firms and which ones to go for, so that also you guys cannot go for the wrong prop firms. I had a student here on that day. He told us how he's lost so many accounts, and not just losing because he's blowing them, but because of markets going down. So unfortunately, he was just in the wrong side. My funded FX, my Forex funds, TFT, funded engineer, Swift trading. Unfortunately, he was in all those ones, and somehow to him it was just like not even the markets, the general Forex industry is against him. So unfortunately for me, I've just been affected by one, so the rest of the others are running on well and they're quite fine. But that's not for today. Even today, I'm not really going much into my accounts and how they're performing. This video will be so long because I've not updated you guys properly in the last 2 months. Maybe let's say 1.5 months. So today I want to focus on market analysis. Cool. So first things first, let's just recap. Let's not, because today is I believe today is Wednesday, but you'll get this video tomorrow, which is today if you're watching it on Thursday. Last week we had multiple news coming out in the market. So let's see that. We had multiple news. We had NFP. That's the same day we had our students here with us. Other than that, we had interest rates from multiple banks. We had holidays. We had quite a lot of stuff. April was coming to an end. We're coming into May. So a lot of things were happening. So for me, I normally focus on the red data, the main impactful data. So you can see last week, Wednesday, we had FOMC, Federal Reserve, federal funds rate, and they were able to maintain their funds at 5.5, which is quite high across the board. So if you look at others, who else released their interest rates, you can see this unemployment rate of NASDAQ. I pay attention to very few stuff. Canada, US dollar, and Australia. Those are the main pairs I trade. That's the reason I don't trade too much. I look at euro and all that, but they don't affect any pair I trade. I don't trade the euro, I don't trade CHF, I don't trade New Zealand dollar, I don't trade JPY, so such stuff don't affect me. At the end of the day, you want clarity in the markets. Over trading and over having pairs is really going to affect you heavily. So I keep it minimal, and that tends to help me most of the time. So yeah, that's what happened last week. Market reacted, and I'll talk about it in a bit. My analysis of the market with that data. Remember, data acts as a catalyst of the path of least resistance. So news acts as a catalyst to push market to go in the direction of least resistance, the path of least resistance. All of that is embedded in the technical analysis. Technical analysis, what you see on the charts, is a representation of what buyers and sellers are doing. The fundamental news, all of that, psychology, all that is embedded. It's all embedded in the price action. So that's why for me, price action is important, but that does not mean you negate fundamentals. And remember one thing, fundamentals is not news. Okay, news is fundamentals. Fundamentals is not news, news is fundamentals. What do I mean? Fundamentals is the big picture. Fundamentals answers the question why. Why is the market going up? Why is the market going down? Why is it moving sideways? Okay, those are fundamentals. Interest rates came out, markets reacted like this, and that's why we're going up. In a low interest rates scenario, markets react different than when we're having high interest rate scenario. When inflation is high, markets will act differently when inflation is low. Political stability, unemployment rates, such stuff, war going on, those are the things that cause markets to go up and down. Technicals don't cause markets to go up and down. I won't see a trend line or a key level and say this is what causes markets to go up. No. All this is just data we are seeing of what buyers and sellers are doing because of different fundamental data. It's just that we can see it being represented technically, and those technical patterns, since it's humans trading, we can see repetitive patterns which we tend to trade with a high probable of a certain outcome, not a certainty but an outcome. So those are a few things I'm just updating you guys, bringing you guys up to speed, up to date, what you need to understand from the word go. Okay, what did I say? News is not fundamentals, fundamentals is news. I mean, fundamentals is not news, news is fundamentals. News is just it's like having a line, okay, and then those line you have dots. Okay, so the dots are a part of the line, but the line is not the dot, but the dots are the line. Okay, I don't know if you get my point. Okay, those dots at different times in the long-term fundamental data just releases, which causes markets to react in a certain way, but in the end we end up moving in a certain direction, which is a path of least resistance. So it's important to find that. I'm a trend trader, and the number one thing I want to find is the path of the market. Where is market going? What is market reacting to in the direction of the trend? Okay, so that's what we got last week. Nothing much this week. What's the date today? Today is the 8th. Okay, so tomorrow we have some data coming out. You can see official bank rate of Bank of England, GBP. Okay, a few talks here and there. Macklem speaks from the Bank of Canada, and then we end the week with such data. For me, what is remaining is not very powerful data, okay, and it's also much not the pairs that I trade. GBP, I don't trade GBP, so I'll watch it, but it doesn't really affect me. So with that said, that's technical side. Let's go into the that's fundamental side. Let's go into the technical. Allow me to start with the dollar index. So dollar sort of gives me a wide understanding of what is happening across the board. So for me, for those who know, I'm a technical analyst, not purely chartist. I use a bit of fundamentals to give me an idea of what's happening, but I tend to follow a lot of technical analysis. Now, follow me closely, okay? So I normally do a top-down analysis. I won't do a top-down analysis on all of them, because if I do a top-down analysis on all my pairs, I'm going to take so much time. So I'll just do on a few. So, now look at this. So to me, the direction of the trend on the dollar has been to the upside. So markets on a daily chart, ever since we bottomed here, sort of 2 months ago, exactly 2 months, that's March 8th, and today is May 8th. Okay, market has been moving in an uptrend, forming higher highs, higher lows, higher highs, higher lows. After this big correction, we had a correction the whole of February, start of March, market started moving up. So March, April, market was more or less in an uptrend, and towards the end of April, we got a correction. Actually, start of May. Okay, market has really been correcting. Now, I see further corrections still coming. Okay, remember, potential gap close. Market left a gap here a long time ago. Okay, see that gap there? There's a potential gap close. Market hasn't yet closed that. So in a bullish direction, my target is more or less around this key level here. Okay, you can see here it's a resistance. I'm looking for markets to push up further a bit to that level, but along the way I go following what market is telling me at the moment. Like, for example, as market was moving in an uptrend from this point, okay, you cannot ignore that in the short term. You can't tell me the whole of February you didn't have a trade because markets are moving in the opposite direction. So in the short term, you find an analysis, an idea of what is happening in the markets, and you trade that idea. So on the 4-hour chart now, I'm doing a top-down analysis where you look at markets from a big picture perspective, breaking it down to the lower time frame. So here you can see markets have been moving up, respecting the resistance levels, support, key levels, resistance and support. For example, you can see our market respected. This was a resistance. Market broke to the upside, rejected this as a support, and moved to the upside. Okay, so it was resistance turned support, resistance turned support, Generally, they're just key levels. So seeing what is happening here is sort of the same thing that is happening here in the big picture. Okay, this big picture here. So this was a resistance, okay? Resistance, broke strongly. One thing that I always tell my students, always watch how market reacts or moves or breaks the key level. Market rejected once, got that big correction, rejected twice, got sort of a similar but not as big correction, and then you see that strong break, okay? Most of the time you'll find that this was news data, okay? Acted as a catalyst pushing market in the path of least resistance. It always pushes market to the path that market needs to go, okay? So it normally creates that sort of direction for the week, and then the rest of the week you can see market continue to the upside. Now, what happened to me as market pushed to the upside, very good bullish data. We got here, and for some time, about 2 weeks or so, market was just in a long-term sideways correction. There was a trade here on other pairs. It was sort of a flag, okay? There's a trade here, okay, where market came, consolidated a bit, but eventually moved to the upside, coming to retest the previous high here, okay, where market got that rejection and came back down. Now for me, this was important data. Normally when market is coming to break a resistance level, or when it breaks it, we normally want to see continuation of that move, okay? Now this time we touched that level, formed what we call a double top, and market started moving to the downside. So now if I go down to my 1 hour chart, now this gave me a lot of data to be more bearish on the data right now than I am bullish, okay? So if you remove this, so look at this data. This is my analysis, okay? So resistance. Now notice this is a resistance. Market came and broke above. Immediately it broke above. What happened? We did not have what I call a successful follow through. Instead, we had a failed follow through. What is a successful follow through? For example, like this. When market strongly breaks, this 2 times, here and here, market came and rejected, came down, broke above it. You want to see a successful follow through, indicating that the bulls are in control. Over here, we had a breakthrough, the bulls are in control, market continued moving to the upside. However, we came and now we got here, okay? Market came sort of slightly. If you're using the bodies, then market had a failed follow through. If you're using the wick, okay, then market had a double top, okay? Almost the same thing. If you go to a bigger time frame, it's the same thing we're just talking about. So call it double top or whatever, markets reached that level and was rejected. And then what happened at this level, okay? That's when news came out. This was FOMC, okay? We had data, interest rates. That was on a Wednesday. Market acted as the news acted as a catalyst, showing us the path of least resistance for last week. So it's sort of, you see the similar one that we got here. Now notice the date, okay? You see that date? That is Wednesday 10th, 2024, okay? Wednesday 10th, April 10th, 2024, written down there at 3 p.m. So between 3, okay, and 4, between 3 and 4, there was news that came out. Market pushed to the upside, acted as a catalyst, okay? Same thing here now, but the opposite, okay? This is Wednesday. Let me give you a perspective. Let's actually look for that date. This was, let's look for what happened. April 10th at 3 p.m. April 10th, so let's look at this. April 10th, 3 p.m. I believe it was interest rates, if I'm not wrong. Either interest rates or inflation. Those are the things that can really cause markets to rally like that. So April 10th on a Wednesday here. So we had some Canada, more or less. It was what time? 3 p.m. Inflation, yes. So it was between 3 to 4. Okay, we had inflation, CPI acted as a major catalyst, and that's why you're seeing markets push to the upside and markets continued. So that week, that break gave us the data or the imprint that market is moving further to the upside. Successful follow-throughs continued, okay? Now here, after market rejected this level, on this day, we had FOMC, okay? You can see what time is it? It's at 9 p.m. You can see down there, okay? News for FOMC comes at 9 p.m. okay? 9 p.m. market acted as a catalyst to the downside, showing us the direction of the trend for that week. So I always wait for data to come out so that I can understand what's going on. So market moved to the downside and then consolidated a bit, okay? Then broke the previous support level. Now remember, sort of the same thing up here. Broke to the upside, a bit of corrections along the way, but market moves to the upside. Now here we had the opposite, break to the downside, and then again, so that for me is indication number 3. Remember, indication number 1 is failed follow through, or a double top. Indication confirmation by the FOMC pushing markets to the lower side. We came and confirmed that after we broke support level to the downside, and then we had the last imprint, okay, or data that market gave us. This was NFP last week. Market continued moving to the downside, so it showed us the narrative or what is actually happening. So coming into this week, I have the same narrative. Yes, we pushed to the downside. Market didn't continue to the downside. We got sort of a correction. So along the way, market came back to this resistance level. Now, last week showed us sort of the indication for the month or for the next 2 weeks, and for me that is bearish. Now this week, having formed this flag formation, I'm looking for markets to move to the downside. A good correction back to resistance level. I'm looking for markets to continue falling to the downside. So that's the pattern, or that's the idea I have on this one. Cool. So that's my general idea of the dollar. So I'm looking for the 4-hour markets to come back at least lower, a bit lower, to support around these levels. Okay, I believe these are stronger levels to get a good buy, to push markets to cover those gaps that we've seen on the big picture, and maybe even for markets to go to new highs. Now with that said, what are the ideas I have around other markets? So I'll start with the markets I trade as. I'll now peruse. The dollar has given you an idea of what's happening generally. Now using that data, I've gone short on USD CAD. Okay, same narrative. Markets were moving in an upside direction. This is the 4-hour chart. Market started moving to the downside. We had a strong impulse to continue the trend. Okay, but what happened instead? Market failed to continue, got to that level, which is a resistance and a liquidity zone. Markets moved to the downside. Now for me, created a new low over here again. This is a correction. I'm anticipating this impulse, correction, another impulse to the downside. At least even for markets to come and reject this trend line. You can see this touch. I can see markets coming to get a better support down here for a second time. So if you look at that on the 1-hour chart, okay, if you look at it on the 1-hour chart, where I got my entry, I got my entry quite good. I was quite patient on this one. Got an entry up there, and markets are now, during New York, they're moving at least quite favorably in favor with the idea or the ideology I have. Okay, now for me, for markets to get that correction, I normally wait. Most of my trade, I get them between Wednesday, Thursday, or Friday, one of the two, Wednesday, Thursday, or Friday. So that's an idea I have on this one. However, if market is able to get some support around this level, moves to the upside, breaks above this level, then I'll be looking to step out, come out of my trade. I don't hold it. I just risk 1%. If markets takes me out, come out of the trade, and let markets do what they're doing. Now remember, USD CAD, other than those data I've shown you about the dollar, USD CAD is a commodity pair heavily affected by US oil. So they inversely move with one another. Okay, so right now, as you're seeing oil moving to the upside, we expect the USD CAD to moving to the downside. If you see the opposite, now you can see the USD CAD has been moving up. Now it's just that we're starting to get that move to the downside. This one has been moving down, okay, creating some sort of an ending pattern as market was approaching this level. Okay, now you're seeing these are patterns that, that's wrong. These are patterns that show bearish momentum coming to an end. Why? Because we're creating a new low, correction. A new low, very small low, correction. Very small low, correction. Very small low, correction, as market was gearing, coming up to this support level where market had turned before and now starting to move to the upside. So to me, this is a ending pattern. Okay, markets can sort of move back to the upside, which can help push that USD CAD further down. So that's my first trade. Other than that, back to the 4-hour Aussie dollar. Aussie dollar as well, I'm looking for more bullish plays than I am looking bearish, because as you can see, the way I've just talked about on the US dollar, okay, looking for a lot of bearish. That means on this one, I'm also quite bullish. Okay, no clear pattern on this one just yet. Market was coming to reject. I was expecting markets to reject the support level earlier on today morning. You see this candlestick here, this red, this is a 4-hour. I was expecting markets to reject that level and move further up, but instead the markets broke below and sort of we're coming to this other support level. So you can see this is a resistance. Okay, support became resistance, broke to the upside. Now it can come and act as a support yet again. So I'm waiting to see, maybe you can get that support and markets to move further up, or if market is able to come and close above this level. What does that show us? Market was moving to the downside, had a break of that support level, did not sustain it, market moved back and closed back above, and more bullish data or more bullish pressure can come into the markets. So that's what I'm watching on Aussie dollar. Gold, I'm in between. The last time I had a trade was about 2 weeks ago. Worked quite well. I made about 3.5%. It was a gold buy. I bought it at 23.10 all the way to 23.50, where which I'll show you where market reached, turned that level, and started moving back down. It was back here. So I remember I bought around here on the lower time frame. Market just reached here. My target was at 23.50, a major key level. Took my profits, came out, which was a good thing because you can see markets ended up turning to the downside. Right now, sort of market is also still in a bearish phase. Okay, you can see started forming lower low, lower high, lower low. Now look at structure. So I normally follow structure, simple structure upon many other things. So I'm not just, when you see me trading, I'm not just looking for a flag and taking a flag. I'm looking for overall direction, structure, candlesticks, patterns. Overall, I'm looking at many things. So you can see here market was moving nicely, higher high, higher low, higher high, higher low, higher high, higher low, higher high. I got a double bottom in the direction of the trend, talked about this multiple times in a different video, and then markets moved to the upside, failed to create a new high. Okay, we formed a good pattern here, which was a bearish signal. Okay, so when market is moving the direction, you want to see momentum. Now this was not strong momentum. Market strongly going up, then being rejected, strongly going up, then being rejected. Formed that pattern, sort of a double top, then markets ended up falling. Okay, when it ended up falling, it ended up breaking structure. Okay, we broke below support. Okay, became that level, got this correction, markets tried to come to that level, formed another similar pattern. Okay, formed a similar pattern there. You can see that similar pattern to what I just shown you over here. Similar pattern, rejection, sell, a good rejection, sell. Now market is creating another rejection, which for me, I don't like to overextend my correction. So this for me is not a good sell. Okay, markets could easily hold at this level and go higher. Why? Because I normally want to see a strong impulse correction than that impulse. Now this was a strong impulse. It was the strongest impulse after market had rallied all the way from down here. So you can see as market was going up, we didn't get really enough strong correction. Reached that level, all-time highs, strong correction. Okay, now notice this imprint or this movement was formed on a Friday. Something I keep saying a lot, data. So Friday, you can see that Friday in the evening, New York session. Important. Those are the nitty-gritty stuff you need to pay attention to. New York session, market created that impulse, the week ended there. The next week we had a correction at this top. When did it come again? On Friday. Then market ended up falling. Okay, another Friday. Then the rest of the week, when the week opened, market just continued falling to the downside. So Fridays for me normally give an idea of what is to happen next week or the other week, and I normally patient to wait for a correction the following week to get a good data. Okay, same thing here. Market got a correction, came back up here. Look, when there was that we got a drop, that was on a Friday. Friday we got to that level, markets ended up falling. Now for me, this is not a good enough impulse to term this as a correction to go short. It might continue going down, but for me, this is one of those trades I want to stay out. Market has really corrected, corrections come to an end. I don't like to overextend my corrections. Those are things I learned along as I was trading. Long term, I'd continue saying, let's just trade. As long as it's a flag, let me trade. I trade flags, but I'm not a flag trader. I tell my students that, sort of like a paradox. Okay, I trade flags, yes, no deny, but I'm not a flag trader. I trade market structure. I look at market structure as a whole. I look at candlesticks, what's data telling me, and all that. So to me, this is one of those flags I decided to stay out. I've not taken this trade. Markets could easily break back above and continue going up. If it goes down, even reaches my target where I'm looking for, it's fine. I won't say, why didn't I take this? There are multiple trades like this I've taken and ended up losing money. Remember, at the end of the day, you're not trading to be right or wrong. You're trading to follow your plan, which is discipline, and in order to protect capital, and number two, to grow your capital. Number one, protect. So for me here, I was protecting my capital. There were much better trades on USD CAD and other pairs. So those are the three main pairs that I trade. Now looking at other stuff, Euro USD, quite bullish because I'm bearish on dollar index. So this one I'll be quite bullish. Okay, we were doing a market analysis earlier on today with Ken. I'm looking at this flag pattern here forming. I'm seeing it rejecting. So I'm more bullish than I am bearish. Markets came, started moving to the upside. You can see the impulses have been strong to the upside. Look at the correction. This correction, quite weak. And this is sort of a similar correction to this one. Okay, quite weak. You can see markets now you have to learn to read market information. For example, look at this strong impulse. We got this strong bearish impulse to the downside on the red candlestick, but it had a failed follow through. Immediately that bearish, the bulls pushed it up. Okay, then come on this day, Thursday in the evening, we got another rejection at that support level. perfect buy. Markets ended up having a successful follow-through move to the upside. Same thing here. So I'm watching the same thing. The impulses to the downside are not as strong. It's already Wednesday, Thursday, Friday where I'm looking for my impulse moves and I'm looking to take that pair to the upside, okay? So Euro USD, I'm also quite more bullish than I am bearish. If market closes below this level, then that will change my whole idea. But as long as market has rejected this level, I'm more bullish than I am bearish. GBP USD, more or less the same thing. Okay, I'm looking for that correction. We're getting a double top here in the direction of the trend. So market has been moving up, imprinted this previous lower supports. Okay, not once but twice. If you extend it further, even more times, okay, you can see that market has been unable to break below that level. Now this time it has come in the form of a flag support level. You can see we're getting rejections of that level. So I'm more bullish on this one too than I am quite bearish. Okay, so I'm looking for that dollar to really sell off. So that's pretty much it. Indices, just a quick overview. I'm more bullish than I am bearish. These are flags to avoid. These are flags I don't trade. Okay, I trade flags in the direction of the trend. Like I was saying in the previous gold trend, I don't want to overextend corrections. This market has been in a bullish market coming up. All these successful flags to the upside were quite good, and those are what I'm looking for. Now I'm not trying to overestimate this correction with how far it can go. This flag over here is flags to avoid. It's the similar one that I have on US 100, flags to avoid. I don't take these ones, okay? These ones I don't take. This is a better one. These ones, this is a very deep correction which is more bullish than it is bearish. I do not want to be against that trend. US 500, same thing. This is a flag I do not want to be in. Okay, this is a flag I do not want to be in. I don't trade these pairs, I just analyze them, but these ones are more bullish than they are bearish. Okay, so this, because market has started, why? Market has broken structure. Notice it was forming lower low, lower high, lower low, lower high, lower low, lower high, failed to create a new low after that strong impulse. What did market do? We got sort of a double bottom at this level. Okay, so market more or less rejected this zone. Okay, it's a zone. Okay, then pushed up, broke above the previous swing low. Swing lower high. Okay, broke above that level. I'd rather even wait for markets to correct to this level and get some bullish plays. Now these are the trades I avoid, and that's the same thing you can see being imprinted here. Same thing, failed to create a new low, broke that key level. Okay, US 30, same thing. Those are flags to avoid. Over the years of trading, you get to understand, even if I trade key levels, trend lines, flags, whatever pattern you trade, you need to know what to do, and that's what most people know, but most people do not know what not to do. And for me, these are things that I've learned over the years through losing multiple times. Trust you me, multiple times. And that's what I'd like teaching here my students, how to avoid such flags, what to look out for, what to trade, how to risk in certain trades, not to risk all the same in all trades. You're not blind just risking 1 or 2% in all trades. You have to learn the art of risk management, trade management, psychology, and all that intertwined. Technical analysis, fundamental analysis, how to backtest, how to come up with trading plan, how to journal your trades. Trading encompasses a lot of things that you need to do on a day-to-day basis, which I'm normally shocked when I hear people trading 10 pairs. How can you trade 10 pairs and journal all those pairs? Too many, okay? But some people are unable to do. Don't be shocked even. You know, one thing we normally say with Forex and trading, strong opinions, weakly held. Okay, strong opinions, weakly held. Right now I have a strong opinion on only trading certain pairs, but maybe in the long term I might change that idea. I have that strong opinion, but challenge it. What if I do it differently? What can I do? Challenge those thoughts, and that's what I tend to do from time to time. So that's basically it from me. Don't talk too much about the market analysis. I think we've done a solid analysis on that chart. I think it's also brought a lot of light to some of you, understanding how markets work. But other than that, you can see I've not gone deep into some things. Most of the things is quite proprietary. One day I might even maybe give it out for free later on. But for now, come, we teach you. We can teach you how to trade. I teach you how to trade my strategy. And my strategy, I'm incorporating more stuff. I'm not only trading flags these days, I'm incorporating more, and I'm testing them, and I'll incorporate them more in order to have more returns at the end of the day. Remember, at the end of the day, it's not a matter of being right or wrong, it's a matter of how can I make money. You know, you can make money out of a trade that you're wrong. Yes, you can. We teach you that here. So other than that, let me end it there. Watching a couple of trades here running. Let me see how the week ends. It's a good start of May. It's my first trade of the month, that USD card short. I can see it's already moving quite much lower. So more or less, I normally, when market moves at a certain level, I tend to break even and then wait for more trades to come later on. So let me not talk much. That's it from me. Like I always say, remember, stay woke, stay financially literate. May the pips be with you. See you soon. Peace.